Berkshire's big mystery bet finally revealed. Contessa Brewer here at Post 9 with the details. And if you know what beat Contessa covers, you may have an idea of what sector this comes from. Were you surprised to learn it was
No, because I have been flagging this for more than a year about Chubb in particular, which has managed to draw down in its exposure in high-risk areas. But here's a company that offers a diversified mix of products. It has financial lines and commercial property and casualty, personal P&C, a significant life insurance business. In fact, in life insurance, premiums written and deposits collected were up almost 40% in the first quarter. And then more than 3/4 of Chubb's business is in the U.S. and Asia, which the company says, Scott, it expects to grow about 40% faster than the rest of the global insurance market over the next decade. In his first quarter earnings call last month, CEO Evan Greenberg said he is seeing the best rates and the best pricing overall that insurance has seen in the last 4 to 5 quarters, and Chubb especially. And then 2023 was the best year in the company's history. Net income up 72% over the previous year. Why does it matter? Berkshire Hathaway started buying this stake in the third quarter, increasing through the fourth and the first quarters. And when you look at, say, the start of the fourth quarter to the end of the first, shares rose 25%. So Berkshire got in on that. You have all cylinders firing. Disciplined underwriting, which has meant lower catastrophe losses than other insurers. Higher interest rates are fueling investment income. And then this growing life insurance revenue. Mayor Shields of KBW has the street high target price of $294. And he said, look, when you look at the concerns over inflation, and especially social inflation, which is litigation, essentially, it has driven pricing to a place that it's exceeding the loss costs.
Well, first I want Josh's response, because you speak always so eloquently about Berkshire and the way they think about stocks, timing and such. What do you make of this? Because I think we spent some time on this show speculating what it is. I think you mentioned you thought maybe for a minute it was Amazon, right? But now it's right in their wheelhouse.
Yeah, no, I mean,
of insurance.
This is their core competency. Can I ask you a crazy question?
Sure.
You gonna be okay with this?
Please.
Is Evan Greenberg Hank Greenberg's son?
Yeah.
And wasn't there some innuendo back in the day that Warren Buffett may have been partially responsible for the troubles that AIG had from a regulatory perspective? But, like, maybe that was all fake and made up on the internet, but,
That's a very in-the-weeds question going back, like, way longer than I have.
I guess what I'm asking is,
you can punt on that one.
Are they friendly, though?
I give you
Think,
permission.
like, they must have a good working relationship if he's making an investment like this.
Can I turn this around a different and ask you a question? Why do you think that Berkshire Hathaway which has a massive insurance business of its own, put all of these eggs into the insurance basket? Like, it's a lot of exposure to insurance.
Yeah. I mean, I would only be able to speculate, but my guess would be the valuation made sense and the business is in for a cycle that they want to have an expanded exposure to.
I'll throw the question back at you, because in some respects, the returns of this space are somewhat self-explanatory, right? Haven't these stocks done well?
They're doing very well. And you've seen Chubb hit all-time highs recently, not in the last week or so. But here's JMP saying we can't think of a company that has a better mix of business lines, geographies, and talent to take advantage of than Chubb, currently trading at 1.7 times book value, where the peers are 2.0.
There you go, right? I'm sorry to interrupt you. We're showing a 1 year of Chubb. I gather that a lot of charts in this space would look similar to that, yes, which is why you raise your hand all the time and say, hey, guys,
insurance.
Take a look at insurance, because the stocks that never get talked about because the industry is perceived as being boring are actually giving you some of the better returns.
MetLife right now, shares over 12 months up 50%. American AIG 52%. We just got news on AIG selling off 20% of Corebridge, which was its life insurance business, and it's making a lot of money on those decisions. One more thing, because prices are where they are, these companies are making boatloads on excess and surplus lines.
Where do we talk about where is inflation sticky? Insurance is one of the areas that experts keep talking about, is one of those areas where inflation remains sticky and elevated. Well, who's minting money off of that?
Also, 5% risk-free rates make it easier for them to fund future liabilities. They don't have to reach for, quote, reach for yield. It helps the portfolios.
Part of it, though, is that they're just catching up. If you look at the car insurers specifically, and because CPI breaks that out, what you'll see is that they've been spending way more than they're taking in on paying out on claims because inflation for parts and labor and all of that has been super high. And now it's just catching up, and now investors are like, oh, we can take advantage of this higher rate environment.
Just be honest, was this the most fun insurance conversation you've had in a long time?
It's certainly the longest.
Just want to know. Okay. Well, I mean, if it was bad, it would be shorter. Thank you.